Central banks have printed more currency during the financial crisis than all history prior to it. No alarm bells were heard. More debt has been accumulated during the past decade than all years prior to it. Nothing but silence. As we make our way into 2016, the question remains, what exactly will not boost growth, but what exactly will keep this decaying carcass known as the global economy alive? Profound changes need to occur in order to move this in either direction. Otherwise, we'll see the slow and steady cancerous death rot this beast into an apocalyptic madness. You came here for the truth, so let me unveil that for you. We are going to get into the bear market of 2016. Am I saying it's going to necessarily be in a bear market? Nominally? No, of course not. The Federal Reserve has a lot of tricks up its sleeve, and they can devalue the currency, and the stock market will appear higher. Let's get into this right away. So much to talk about. I just wanted to say up front, really enjoy doing these videos and really jam-packing the information in there. I do read all your comments. Let's get into this right away. It's the worst year for asset allocation funds since 1937. That sounds like a long time to me. A 2.2% gain in the S&P 500 is roughly the best anyone could do. They said everything is fixed. They said the recession is over. They said that there isn't a problem right now. In fact, things are doing great. If you read the reports from different fund companies, they will tell you specifically things are doing great right now. 2.2% gain. If you judge the past year by which U.S. investment class generated the largest return, a case can be made it was the worst for asset allocating bulls in almost 80 years. This is a big deal right now, but of course, nobody's really talking about it at all. And if you go down here, you can see the different analysts who talk about this and their predictions. There's much more in the article, but basically, just wanted to cover the point of asset allocation. The idea behind asset allocation is simple. When one market struggles, it's okay because an investor can jump into another that is thriving. Not so in 2015. I've read countless books on financial history, and what you will find is simply that there are cycles. You need to understand the fundamental analysis of finance. That's what my book is about. That's what my whole money GPS theory is about, that there are cycles. You have one, and then as that bubble begins to pop, another bubble forms. This has all happened with the introduction of central banking. That's really what made this occur. And you can see as the years progress on, I believe I've shown charts on previous videos, but as the years have gone on, they've prolonged the bulls, but as a result, prolonged the bears as well. So quite interesting to see the way this all plays out. It's not the way it used to be. What I've noticed specifically that in the past, let's say since the year 2000, nothing has been making sense. You still need to use that fundamental analysis to decide how things are going to play out. But ultimately, things are really messed up, to put it lightly. This is out of MarketWatch. Many Wall Street strategists are dusting off their 2015 targets for the S&P 500 index and trimming them for 2016. Optimism in the stock market took a hit in 2015. The average year-end 2016 target for the S&P for the 10 strategists surveyed by MarketWatch is actually lower than the average of their original 2015 targets. That's called a bear market in their predictions. If you don't have any growth, well, as far as I'm concerned, that's what I would call a bear. Perhaps not technically. And you can see their targets right here in all these strategists, Goldman Sachs, BMO, Credit Suisse, all the big boys. One thing to note is that they all got bailouts by the Federal Reserve. Do I really want to trust exactly what they're saying? Not necessarily, but good to look at. And what they talk about is the different strategies of the central banks. Federal Reserve tightening, the ECB easing. That's going to boost the dollar and subsequently pressure earnings of U.S. companies doing business abroad. How many people not located in the U.S. are trying to buy U.S. products right now? It's certainly not a good deal, I can assure you as a Canadian. So, out of the Financial Times, the big moment, or this moment, all the big players seem uncertain, even fearful. They're talking about the different countries around the world not doing well right now. They're actually quite conservative in what they're doing because obviously we have tensions growing. They mentioned here with China and Japan, and with Russia, obviously China and Russia being partnered up, and there's everything going on with ISIS and everything else. But you, on top of all that, add up this debt and deficit problem that they're having. They don't have all that cash they once did. It's now debt. So they're in a big issue, and China is not excused from this at all. I love the way that they mention Japan. Its faith is fading that the radical reforms known as Abenomics can truly break the country's cycle of debt and deflation. What has Japan been doing? Well, let's see. They've continued on a policy that they've been implementing for decades, and that is print a lot of money, and that will get you out of deflation. So you have this wound that's just bleeding out the left side of the body. Tons of blood just coming out. And what do? Well, they look at it and they think, okay, quickly, we need to act. We need to act right now. No, don't patch that up. It's going to take a long time, may not work. Let's pump in blood through the right side of the body. And let's just have that happen, and let's just keep doing it. Don't look at the other side. Just don't look at all. If you don't look at it, nothing's going to happen. Let's monitor the right side. And this is exactly the stupidity that is going on right now. Japan is a perfect example. I've talked to countless people in the financial industry that tell me Japan is the perfect example of how money printing works. QE works. Quantitative easing works. All of these stupid schemes, that's exactly what it is, works. And I have to sit there and be amazed the amount of money that these people manage, or they sell basically through the mutual funds or whatever. Oh, this is unbelievable to watch it all. Really feel sorry for these people. In my book, I talked about the stock market, and right here I said the stock market didn't return to its 1929 high until 1954. This amounts to a total of 25 years. 9 years after the end of the war. Not during the war, not the year after the war, a decade after the war. Look at what's happening today. All the wars that are being fought. Now think about this. This could very well happen. And you might think, well, the Federal Reserve probably didn't print money during that time. The Federal Reserve didn't drop interest rates. But you need to look a little closely because they did act in these ways. Sure, they didn't print up trillions like they did today. They didn't have the interest rates this low for this long. But the principles here are the same. This is a clear example of the fairy tale money managers will tell you about the stock market rising 10% on average. It doesn't happen like that. There are times in history where we have extended and prolonged periods of deflation, of garbage, of losses. JP Morgan to increase deposit rates for some big clients in January. You can go into the details if you'd like to look them up for yourself, but basically this is no different than what we've seen with the capital controls, the bank holidays, the bail-in, the taxes, the inflation, the hyperinflation, and every other scheme of taxation that they can implement, and they're doing so on the big clients in this instance first. Politically, it's a lot easier to do this to some of these big clients, to do different things to bigger clients. Look at what happened in Cyprus with the bail-in. Do it on the big guys, because the little guys will be all for it. And, well, quite frankly, the so-called big guys aren't the biggest of the bigs because they keep their money offshore, or they have it in corporations or anything like this. But you have essentially the upper middle class, which is really being affected by this. And they don't have much of the votes. You have the lower and middle classes, which occupy the voting block that you need. So all of a sudden, you let this happen. Next thing you know, it's the middle class. And then after that, it's the lower classes. They will implement all of these strategies, I assure you. Let's move on to this. Higher interest rates are about to hit companies just when many are ill-prepared to handle them. Federal Reserve took interest rates up for the first time in nearly a decade, ending the days of free money. Of course, as I've said before, it's a fraction of a percent, so let's not get carried away here. But, of course, if they do increase interest rates to some meaningful amount, it's going to obviously be destruction. It might take a few years for higher rates to hit companies as they look to refinance debt. But the troubling part is many companies aren't in great shape to eat the higher cost. And of course, they get into oil and how this has been a problem. This is part of the reason why they're affected right now at this time. But I just wanted to note the fact that interest rates do affect companies too. It's not just individuals. And then, speaking of oil, there's a dark side to those delightfully low gas prices. Housing markets are slumping in the communities where recently flush from the U.S. shale fracking boom. They talked about North Dakota, West Texas, and also El Paso and Houston. Think about other countries around the world as well. Look at Canada, and you can see the places where there is oil and affected by this, and Alberta and other areas, they're affected with the same way. You can see this, and I've covered it here before. Real estate in those areas declining, new home sales declining. And this is a problem for all of the markets interconnected with it. They want to build homes. Well, of course, there's construction workers, and there's all the materials. There's copper, there's lumber, and everything that's affected along the way. Right here. Something that I've covered countless times. I'm going to cover it again and continue to do this. The rise of the robots, and this happens to be for crops. TOP Robotics researchers say Australia could see fully automated vegetable farms by 2025, less than 10 years away, with the ability to automate the entire production process for some crop commodities. Already you have such a decline in the farming for a lot of people. Well, what's this going to do? It's going to take individuals and push them out of the farms, out of the rural areas, and into the big cities getting low-paying jobs. What's that going to do? Well, I'm just going to say it. It's Agenda 21. Let's move on to this. As we look at Google, lovingly have had their U.S. schools purchased. A third quarter were purchased were Chromebooks, and basically they're cheap laptops that run Google software. So this is great. They can get some cheap laptops into their system. But oops, Google is also tracking what those students are doing and the services is running. Some of that information will to sell targeted ads, according to a complaint filed with the federal officials by a leading privacy advocacy group. Of course, this is all in the fine print. They're allowed to do anything they want. They're allowed to listen to this video here. They're allowed to read what your comments are posting and use that to sell advertisements. And of course, all the keywords and the titles and the descriptions of this video are used for the advertisements that they put on to the videos. So this is the way the business works. What I don't like is, not in this case, because of course it's a known fact that you use their software, you use their hardware, they're going to spy on you. But what about those cases where they've admitted that, for example, your dishwasher is spying on you? If you don't believe that, type into your search engine, your dishwasher is spying on you. Oops. Anyway, that's all for this video. And if you enjoyed it, if you found it informative, please give me a thumbs up. I do appreciate that very much. Of course, I'll say it again. I really enjoy reading all the comments. I do try to reply to as many as I possibly can. I usually do the current day's video, perhaps the previous day's video, and just try to get to as many as I can. Every time you comment, every time you give me a thumbs up, it helps my videos appear higher up in the Google and YouTube rankings. So I really do appreciate that very much. It's a way for you to share it if you don't share it through your Facebook and Twitter and everything else. It's a way for you to essentially share it without sharing it. So I do appreciate that. Thank you. Last but not least, if you found the video informative, you're definitely, absolutely, assuredly going to find my book, The Money GPS, even more informative. If you head over to Amazon, they have this look inside feature. It allows you to flip through the pages of the book and see if you like it. Take care.